Hey, this is Harold. Today is Monday, March 2nd, and in today's video, I'll be going over my daily plan and the trade that I took today. I woke up this morning and I wasn't mentally feeling the best. I just had bought two new evals and I'm still new to the prop firm game, so I was wondering what I should do with them, whether I should wait a little bit or if I should just use them now. And it being Monday, I had a feeling that price action might be a little choppy. We might not get exactly what we want. So I told myself, since I'm already feeling iffy about like which account I should use, I just decided to go with the eval. So I ended up taking a trade on the eval, and I'm just gonna be going over the trade just because I take the same exact trades. I don't gamble on the evals. I don't do something different. I don't try new things. I'm taking A plus setups, B setups on my evals as well. So I like to go over these. But without further ado, let's just get into it. Yeah, so I had a profit of 1543. This was the first trade I took on this new eval. We traded two contracts. Normally I trade one. 15.5 points secured with a planned R multiple of 1.88, realized 1.87, risking around $825. So almost a 1 to 2. And then as you guys can see over here, 1543 on a Monday. This is an eval account. So going into the trade, into the plan, we were opening up around 68.08. My plan for today was kind of based off what happened over the weekend, and we got this huge gap down, right? We got this gap down and we attempted to fill, but we had this space remaining. So either price was going to come back up and try to fill this gap, or we were going to continue to the downside. And this gap was pretty much created off of the US-Iran war news. And coming into the market on a monthly chart, you could kind of see that we're still range bound here. And this is only the past like 7 or 8 days, but even looking back 30 days, we're still like in this big range. But in the short term, in the past 3 days, we are downtrending, right? We are downtrending. So short term downtrend, I was leaning slightly bearish, but I still like to create a plan for both sides. So to the downside, my plan was simple. If price was able to break 6800s, it was somewhere around right here. If price was able to break this to the downside, let's see, to the downside, then I was looking to target right over here, 6872 or 6882. So if we were able to break 6800, then I was looking to target 6882 demand zone, and then I was looking for another continuation down if we were able to continue. Now, if we ended up reversing, because we are in a short-term downtrend, I don't like to just take longs off the nearest high. I need pretty good confirmation that we are attempting to break to the upside and accept the upside. So for me, I needed to break both these levels right here, the weekly and the monthly value areas right here, these two levels. And if we were able to break these two levels, then I was looking just to target the resistance right here before the gap is filled. When we're going counter trend, I don't like to take super big targets. I keep it very tight because it can reverse on us at any moment, right? Even making price up to this point, it does not mean that the trend has changed. We're still in a short-term downtrend. And this gap, it's likely to attempt to fill and then just reverse right back. At the same time, I needed strength to the upside. This move to the upside had to have been fast and it had to have been early. I didn't want didn't want price to kind of just chop, go like this, come down, go like this, and then like eventually try to break it. We needed off the morning rip, we needed something quick, right? And that's exactly what we got. So going into the market, looking these, this is a 2-minute chart by the way, and this is a 5-minute chart. Price opened and we made an aggressive move to the upside. Our level was actually broken in the first 5 minutes. Okay, so that's why I'm showing you guys the 5-minute chart. We actually had 59,000 lots of volume, which is, it's pretty big for a 5-minute chart. Usually the 5-minute charts are ranging from like 40 to 50,000. But yeah, I executed off the 5-minute, but I moved right over to the 2-minute just because if the first 5 minutes are very aggressive, I execute off the 5-minute and then switch over to the 2-minute. But anything after the first 5 minutes, if we see a play after like maybe 20 minutes, 30 minutes later, then I'll be executing off the 2-minute. So yeah, we had aggressive buyers right over here. We also had aggressive buying here. We pretty much had a lot of aggression all the way through, right? We opened over here and we broke our monthly value area low. We didn't break the weekly value area low off this, but it was good enough confirmation and momentum for me to take the trade long right over here. So I took the trade long right here. This was my entry. My stop was below this aggression right over here. As you guys can see, right over here, right over here. And then now I'm going to move over to the 2-minute chart just to show you the extra confirmation that showed me, okay, this might be a good trade to hold, right? So if we were looking on the 2-minute chart, we actually would have gotten pretty good confirmation right here to enter the trade a little bit later than the 5-minute, but still good confirmation. We had steady volume going up here, right? 17,000 lots. And we had a decrease in volume showing potential sellers up here. We see aggressive selling to the downside, but we hold, right? We hold the aggressive selling. And this is very powerful for a continuation because this was the most amount of volume transacted out of any of these breakout candles, right? But it was on selling, meaning there was a lot of sellers attempting to sell, but buyers were able to hold this up. You can see that buyers were also able to hold this up because if there was a lot more sellers in this transaction, then delta would have most likely been negative, but we get a positive delta. So delta is diverging. We get a red candle but positive delta, and then the next candle over, we get a decrease in volume showing that, okay, these sellers might not have enough strength to keep pushing lower. And then we just keep seeing an increase in delta, right? Delta percent, 3%, 5%, 13%. And this right here is kind of what just allowed me to stay in the trade. It gave me a lot more conviction to stay, right? This right here. And we ended up hitting the trade right over here, somewhere over here. Ideally, if this was on my funded account, I would have targeted the 56s, not the 53s. I would have targeted slightly higher just because that would have been the true level of resistance. But because I was on an eval and there is a 50% rule, that was the best I could do, right? If I did any more, then I would have violated the rule. So that is it for today. I took a very good trade. It happened to be on my eval, but you know what? I woke up feeling very conflicted on what to do with my accounts today, and it got me really thinking a little bit more about money, saying, oh, should I go for the funded account so I can profit and win and make money, or should I do the eval so that I can set myself up for multiple accounts? And I was already in this mindset of, oh, I want to make money, and I realized that, so I decided to just tell myself, hey, just take the eval, right? Take the eval, and if you get a great trade, then you get a great trade, and you're one trade away from having another funded account, right? And if you guys have been following along, this first funded account that I passed, It's the Lucid Pro account, so you have to create a buffer. And either way, I really wanted the Lucid Flex account. So this either way it's working in my favor. So make sure to just trust your gut. If you're feeling hungry for the money, that's a potential for you to really blow out that day, okay? You might make a lot of mistakes. So if there's a way for you to be able to mitigate that and control your risk, then do so, like I did today, just using my eval instead of using my funded. Because who knows how I would have traded if I used my funded, right? And at the same time, it made me realize today that my mindset for evals versus funded is slightly different. I'm very conservative when it comes to my funded, but when it comes to my eval, I'm a lot more loose with it. I mean, I'm sure it's because the evals really don't matter, and I'd rather blow them than take 20 days trying to pass them, right? So there's many things to be learned. So thank you for tuning in. Today was a good trading session. There was a lot of volatility. I hope that this volatility continues into tomorrow and we have another great session. I'll see y'all tomorrow. Peace.